All right, so today we're taking a deep dive into HCL Technologies.
Okay.
You know, all those reports companies put out,
Right.
they can seem a little dry,
Yeah.
but for a tech giant
Yeah.
like HCL,
Mm-hmm.
trust me,
Okay.
there are some real insights buried in there.
All right.
We're talking about a company with over 227,000 employees,
Wow.
60 countries,
Okay.
over 200 delivery centers.
Global.
This is global scale.
Yeah, absolutely.
Yeah.
And understanding how a company like HCL is performing
I
is
see.
not just for investors.
Right.
It gives you a window into the broader trends that are shaping the tech industry, like
Right.
which technologies are attracting investment,
Uh-huh.
where companies are focusing their resources, and really where the future of tech might be headed.
Exactly.
Yeah.
So to decode all of this,
All right.
we've got a few key documents.
Okay.
We've got HCL's annual general meeting notice,
Mm-hmm.
their annual report for 2023-2024,
Okay.
and of course the financial
The
statement.
numbers. It's like getting a behind-the-scenes look
Yeah,
to see how things are really working.
kind of like an x-ray
Exactly.
of their strategic health.
Yeah.
So the big questions we're tackling today:
Okay.
how is HCL Technologies really performing?
Right.
Are they growing?
Mm-hmm.
Are they profitable?
Yeah.
And most importantly, are they making the right moves to stay competitive in this crazy world of tech?
Right.
Let's start with the top line revenue growth.
Okay.
What kind of year did they have?
Well, in their annual report, HCL is touting industry-leading growth
Okay.
for fiscal year 2024.
Right.
And they've got the numbers to back it up.
Yeah.
They even crossed the $50 billion market capitalization mark.
Wow.
But to really understand this growth,
Yeah.
we need to break it down
Okay.
by their different business segments.
Because a company this size isn't just doing one thing, right?
Right?
They've got their fingers in a lot of pies.
They do.
Yeah.
They've got engineering and R&D services, IT and business services. Okay.
Digital business services and more.
Yeah.
Each segment contributes to the overall growth story.
Right.
But some are definitely driving more growth than others.
Interesting.
For example,
Yeah.
they specifically highlighted their acquisition of the ASET Group.
Okay.
It's a German company
Uh-huh.
specializing in automotive engineering services.
So they're making a play in the automotive space
Exactly.
with all this buzz around autonomous driving electric vehicles.
It's a hard area.
Smart move.
It is.
Yeah.
It's a high growth area. And this acquisition shows that HCL is strategically positioning itself to capitalize on those trends.
I see.
It's not just about expanding.
Right.
It's about diversifying their revenue streams.
Okay.
Speaking of which,
Mm-hmm.
they operate in 60 countries,
Yeah.
so their client base is pretty diverse.
Geographically too, right?
Exactly.
Yeah,
Their reach is impressive.
it is.
They even highlight having 20 nearshore locations.
Nearshore locations?
Yeah. What does that even mean?
Well, it means they can provide services closer to their client's home bases.
Oh, I see.
Yeah.
So like,
So if you're a client in, say, Europe, you don't necessarily have to rely on a team
Okay.
that's based all the way in India.
Gotcha.
They might have a team
Closer.
that's right there in Europe
Okay.
to support you.
That makes sense.
Yeah.
It's all about being closer to the customer.
Exactly.
Yeah.
It's becoming increasingly important
Mm-hmm.
in today's globalized business environment.
Right.
Clients want partners who understand their local markets
Yeah.
and can deliver services with agility.
That's a good point.
And it's not just about geography.
Okay.
They're working with over 400 global enterprises
Wow.
on their digital transformation journeys.
400.
That's a lot of companies.
Yeah.
That kind of client diversification.
Mm.
It's key for stability and resilience.
Okay.
You know, if one industry is having a tough time,
Right.
it doesn't bring the whole company down.
They're not putting all their eggs in one basket.
Exactly.
Okay, so revenue growth
Yeah,
looks pretty healthy,
it does.
but growth for the sake of growth
Right.
isn't always a good thing.
That's true.
What about profitability?
Mm-hmm.
Are they just getting bigger, or are they actually getting more efficient too?
That's where we dig into those all-important margins.
Okay.
Operating margin, net margin, and EBITDA margin.
Yeah.
They tell us how effectively HCL is managing its costs
Right.
and turning revenue into actual profit.
So what's the story there?
Okay.
Give me the good, the bad, and the ugly. All right.
Looking at their financials, one thing that jumps out
Okay.
is a decrease in outsourcing expenses.
Interesting.
It seems they're relying less on third-party resources.
Bringing more expertise in-house
Yeah.
could be a sign of confidence
Potentially.
In their own capabilities?
It could be.
Yeah.
But on the other hand, there's an increase in finance costs, largely driven by interest expenses. Oh,
that suggests they might be taking on more debt.
To fuel their growth.
Exactly.
Which is always a little risky, right?
Yeah, it always carries some level of risk.
There's a bit of a trade-off there.
Right.
Lower outsourcing costs might boost efficiency in the short term, but higher debt levels could impact their financial flexibility down the road.
Yeah, it's a balancing act.
It is.
And then there's the effective tax rate.
Right.
Which also plays a role in their overall profitability. But before we get too deep into the weeds of finance, let's shift gears and talk about their order book.
Because strong financials are great.
Yeah.
But they need a healthy pipeline of new business.
Absolutely.
To keep that momentum going.
It's all about the future.
Right.
Yeah.
What's the outlook there?
Well,
yeah.
HCL doesn't break down their order book in granular detail in these documents.
Okay.
But they do emphasize that they have a substantial backlog of projects from those 400-plus global enterprises we talked about earlier. So there's a steady stream of work coming in.
It seems so.
That's reassuring.
Yes. It indicates that HCL is continuing to win new business and secure its future revenue. And a large part of that success probably comes from their investments in research and development.
Right. Because in tech, you snooze, you lose.
Exactly.
Are they putting their money where their mouth is when it comes to innovation?
They definitely seem to be.
Okay.
Their annual report highlights significant R&D investments in data engineering, artificial intelligence, and 5G technology.
Those are some hot areas.
They are.
Yeah.
Those are the areas that are really driving the future of tech.
Absolutely.
So it makes sense that they're focusing their resources there.
Okay.
But are they just throwing money around randomly?
Good question.
Or is there a strategy behind these investments?
All right. Well, let's find out.
No, they're not just throwing money around randomly.
So where are they focusing their efforts?
Well, their annual report specifically mentions big investments in data engineering, artificial intelligence, and 5G technology.
Yeah. Makes sense.
They're even pouring resources into specialized innovation labs.
Innovation labs?
Yeah.
What are those exactly?
Think of them as kind of like incubators for developing and testing new ideas.
Gotcha.
And they're not stopping there. They're partnering with those giants of the cloud computing world.
Who?
What they call hyperscalers.
Hyperscalers.
To develop cutting-edge solutions.
Is that like Amazon Web Services?
Yeah.
Microsoft Azure.
Exactly. Those are the big players.
Okay.
And partnering with them is a smart strategy.
Why is that?
It gives HCL access to world-class expertise and resources without having to build everything from scratch.
Right. It's like leveraging the power of those giants.
Exactly.
Okay. So they're investing in R&D. They're partnering with these hyperscalers.
Yeah.
But are they actually producing anything concrete?
They are. And they're not just talking about AI in some vague futuristic sense.
Right.
They've actually launched something called HCL Tech AI Force TM.
AI Force TM.
Yeah.
Sounds intense.
It is.
What is it?
Think of it as a turbocharged platform for software development and engineering.
Okay.
It's built on what they call a Gen AI platform.
Gen AI.
Essentially AI that can generate code.
Wow.
And automate tasks.
So it's like AI building AI.
In a way, yeah.
That's pretty wild.
It is.
And how does that benefit HCL?
Well, it can drastically speed up the process of getting new products and services to market.
Which in the tech world is everything.
Absolutely.
Speed is king.
It's a competitive advantage.
Right.
And remember those 400-plus global enterprises we talked about earlier?
The ones doing the digital transformation.
Exactly.
Yeah.
Well, HCL is positioning itself as the go-to partner for navigating this new world of AI-driven transformation.
Ambitious.
It is.
So how do they stack up against the competition?
Yeah.
Are they leading the pack in these areas, or are they playing catch-up?
Well, they certainly present themselves as a global leader in engineering services.
Okay.
They're not shy about highlighting the awards and recognition they've received either.
Yeah. Their annual report is packed with those.
For example, they were named one of the world's most ethical companies in 2024.
Impressive.
And they also ranked highly on the Forbes Best Employers list.
So they're not just focused on technology.
Right.
They're also trying to build a reputation for being a responsible company with strong ethical values and a positive work environment.
Exactly.
And that matters.
It does.
Especially these days when consumers and investors are paying more attention to corporate values.
Absolutely.
It can be a real differentiator.
It can.
Okay, so they're investing in the right technologies,
Yeah.
winning awards, building a strong brand.
It seems so.
But how does all of this translate into cold, hard financial performance?
Right.
That's where those valuation ratios come in, right?
Right. We need to look at metrics like price to earnings ratio,
Okay.
price to sales ratio,
Uh-huh.
and enterprise value to EBITDA.
To see how the market is valuing HCL compared to its peers.
Exactly.
Okay, break it down for me.
Right.
What do these ratios tell us about HCL's current valuation?
Well, to really understand these ratios,
Yeah.
we need to consider the broader context.
Like what?
Like, how does HCL compare to other companies in the tech industry?
Okay.
What are the prevailing market trends?
Got it.
It's a complex puzzle, but one we'll try to piece together.
Right.
But first, there's one more crucial piece of the puzzle we need to consider.
Which is?
Data privacy laws.
Oh, right.
These are becoming increasingly stringent worldwide.
Yeah, they are.
How is HCL navigating this complex landscape?
That's a great point.
Especially for a company that handles so much sensitive data.
What are they doing to ensure they're complying with all the regulations?
Well, their annual report emphasizes their commitment to upholding global data privacy laws.
Okay.
They have a dedicated enterprise risk management program in place.
Okay, so they're not taking it lightly.
No, they're not.
They've got systems and processes in place to manage data responsibly.
Yes, and that's essential for maintaining client trust
Right.
and protecting their reputation.
Makes sense.
Now, circling back to those valuation ratios.
Okay, let's unpack those numbers.
All right.
But before we do,
Yeah.
I'm curious, what about the leadership at HCL?
Okay.
Who's steering this ship?
Well, HCL Technologies has a robust board evaluation process
Okay.
that focuses on individual director performance and independence. They have a nomination and remuneration committee
Okay.
that's responsible for recommending director compensation.
So there are checks and balances.
Yes.
To ensure that leaders are held accountable.
Exactly, which is a good sign.
Right.
It suggests they're committed to good corporate governance.
Okay.
Now, getting back to those valuation ratios.
Right.
The PE ratio. So
Right.
the PE ratio, it compares the company's stock price to its earnings per share. A high PE ratio often suggests that investors are optimistic about future growth and are willing to pay a premium for the stock.
I see.
On the flip side,
Yeah.
a lower PE ratio might indicate that investors are more cautious or see less growth potential.
So it's kind of a measure of market sentiment.
Yeah.
A reflection of how confident investors are in the company's future.
Exactly.
It's not just about current performance.
Yeah.
It's about expectations for what lies ahead.
Right.
Got it. Now, what about the price to sales ratio?
Oh,
How does that factor into the equation?
The PS ratio looks at the company's market capitalization
Okay.
relative to its revenue. It can be especially useful for evaluating companies that are still in a rapid growth phase
Okay.
and might not have consistent profits yet.
Like many tech companies.
Exactly.
So for a company like HCL Technologies,
Yeah.
which is heavily investing in new technologies
Right.
and expanding into new markets, the PS ratio could be a key indicator. It gives you a sense of how much investors are willing to pay for each dollar of sales the company generates.
Right.
And then we have EBITDA,
Yes.
which is a bit more complex.
It is a little more complex.
It takes into account the company's debt and cash when comparing its value to its earnings.
Right.
This can provide a more comprehensive view
Yeah.
of company's financial health.
It's a more holistic picture,
Okay.
considering both the company's operations and its financial structure.
So it's looking at the entire enterprise value, not just the market cap.
Exactly.
Okay, so we've got these three ratios.
Yeah.
And it sounds like we need to look at them together to get a well-rounded understanding of HCL's valuation.
Right. You can't just look at one in isolation.
But I'm curious, from your perspective,
Yeah.
what's your take on HCL's position? Are they on the right track?
Based on everything we've seen in these reports, I'd say they're making some very strategic moves. Their focus on data engineering, AI, and 5G positions them well for the future of the tech industry. And their commitment to sustainability, ethical practices, and employee development could give them a real edge in attracting both top talent and clients who share those values.
It sounds like they're ticking a lot of the right boxes.
They are.
But there's always but isn't there?
Of course.
Yeah.
The tech landscape is constantly evolving.
Right.
And what's hot today might be old news tomorrow.
That's true.
They'll need to stay agile and adapt to keep pace with the rapid changes in technology.
And we did see those rising finance costs earlier.
We did.
Could that become a concern down the line?
It's definitely something to keep an eye on.
Okay.
Managing debt levels and maintaining financial flexibility will be crucial for them to continue investing in innovation and growth.
So for you listening, the big question is,
Yeah.
what does all of this mean for HCL Technologies' future?
Right. What's the takeaway here?
Will their investments pay off?
Will they be successful?
Will they continue to attract and retain top talent?
Good questions.
And how will they navigate the ever-changing landscape of data privacy?
Right.
And maintain their commitment to ethical practices?
Lots to think about.
There is.
Here's something to ponder.
Okay.
How might HCL Technologies focus on specific technologies like Gen AI and cloud computing?
Yeah.
Position them for future growth compared to their competitors?
That's a key question to consider as you explore these reports further.
It is.
And we highly encourage you to do just that.
Yes.
Do find links to all the reports in our show notes.
Check them out.
Thanks for joining us on this deep dive into the world of HCL Technologies.
It's been a pleasure.
Until next time, keep learning, keep questioning, and keep diving deep.